Hi, this is Jeffrey Cohen, Chicago Quantum, here for the weekly chit chat. It's markets, it's our firm, it's week 30. So it's Friday, July 30th, and I want to speak to you today about what's on my mind. I'm kind of coming at you with a clean sheet of paper approach because we run our model every week and we learn about the markets and we see where things are going. We have our own portfolio, and the portfolio really helps us to kind of feel what it's like in the market, to sweat the ups and the downs. And we're active on Twitter, so we're getting a feel for what people are talking about. And we're kind of like we're all in. And then now we're studying for the Series 7 and the Series 65 so that we can be investment analysts that can actually charge money with an SEC and a FINRA, authorization, which I think is great, or approval, and just a lot going on. So just going to take it from the top. So I'm sharing my screen, and I'm showing you an article of what just kind of happened today, or what's going on. So the whole context is everyone's pretty much afraid that the market is at the top. I've heard that investment advisory services are saying that returns are going to be down. I read on Twitter that the sky is falling and everything's going wrong. And then I even noticed some things. There's like 25 new IPOs every week in the 5 listed exchanges that we run on. So it's about 4,600 stocks, and it's going up by 5-6% every week. That's crazy. So there's a lot of competition for the investor's dollar right now. And typically that's not good for a stock that's not an IPO because there's competition, right? And so if I had 100 stocks and now I have 104 stocks or 101 stocks, then in theory the money has to spread out to cover those new stocks. And so like Robinhood goes public, 32 billion valuation. That just pulls money out of other stocks. And so just something to think about. So what did we see today that was interesting? We saw that U.S. consumer spending surged in June, and we're seeing that. Although personal income barely rose last month, wage growth, which is based on productivity, was the fastest in 13 years on an annualized basis. So we have wages going up. Okay. Consumer spending rebounded 1% last month. Personal consumption, you see, has driven up. Savings rate is starting to drop, or has dropped. It's 9.4. It's still pretty high. So people are starting to spend. And by the way, 2/3 of our economy is consumer spending. So when you see spending, it's really good for the economy, right? Spending on goods rose 0.5 point. Spending on long-lasting goods decreased. So we're not buying cars, appliances, houses, equipment, non-durable goods. We're going to the grocery store. We're going to the Target or Walmart. We're going shopping. We're buying sneakers. I just bought a new pair of sneakers this week. I haven't bought new sneakers in over a year. Right? Old sneakers were fine, but you know what? We're going out now, right? We're going to go hang out. We're going to go jogging, go to the health club, whatever. I need new kicks, right? $35-$40. There's your 1.8%. And gross domestic product was actually very nice. Look at that. Consumer spending was up 12% last quarter at an annualized rate, which accounts for the economy's 6.5% growth rate. That's a growth rate that sounds like China's growth rate. I had read somewhere that the United States economy has fully recovered from COVID pandemic. And so, again, I'm in this fight on Twitter where they're like, it's depression, recession, where everyone's going to go in the toilet. And I'm like, no, economy looks great. I just heard Kristi Noem speak this past week at a Republican fundraiser and spring gala, and she talked about how South Dakota has a growth rate of almost 10%. It's unbelievable based on tourism and based on agriculture. They're doing great, right? And so I want you to think about people are going back to the stores, they're shopping, they're going on vacation, they're taking trips. So why is that important? Because the stock market doesn't really do anything in the summer. The whole point is it's summertime and people are starting to travel and they're starting to spend money and they're starting to have fun. So they're not staring at a screen like I am all week. So I want to talk a little bit more about what that looks like. So let's take a look at FinViz. So by the way, I love the map on FinViz. So for the 1 week, and this is for the day. So you can see for the day, right, what's been, by the way, great view. The bubbles view on FinViz shows you on a day-to-day basis, 1 day only, what's going up, what's going down, right? I said, take a look. Amazon, market cap of $1.8 trillion, is losing like 7% today. You realize that that's like $150 billion or $110 billion lost 1 day. That hurts. Right? And there's some other smaller ones. Skyworks Solutions, which I've never heard of. IDEX Labs, I don't know, whatever. Newell Brands. Oh, Newell Brands is like Rubbermaid. I don't know why they're falling, but then you look at what's going up. KLA Corporation, which is semiconductor equipment. Dexcom. Biorad, I don't know. So you can see, there's look at Tesla's on a rampage right now. $700 a share after the 5-to-1 split. It's like a $3,500 stock pre-split. That's crazy. We could have bought Tesla at like $75 a share. My wife and I were talking about it. We still talk about it. We could have bought a new Tesla with the money we would have made. That's great. So what I'm here to talk to you about is it's summer, and so stocks are kind of in the middle. You got earnings season, so Amazon's down, and it's just a great way to look at the market. But you're going to see some more context if you look at the market over a week or even over a month. The first thing I want to point out to you is, wow, the enablers of the economy, PayPal, down almost 7%. UPS and FedEx, transportation companies, right? So people are going to the stores, they're going out shopping, they're going on vacation, they're not shipping as much. Amazon, they're not shipping as much. Las Vegas Sands, I don't have no idea what's going on with that, or Wynn. But they're not shipping as much. I want you to think about that for a minute, right? Remember the Dow theory where you have the utility, you have the industrials, and you have the transportation stock. So if transportation's down, look at railroads are down. Not that consumer goods are transported by railroads. Normally that's different kinds of stuff like oil and gas and coal and lumber and stuff. But economic activity may be slowing down if the railroads are going down. I'll tell you, our favorite industry, which is biotech, is in trouble right now. Biotech has swung to the negative. So if we look at full, why am I pointing it out? Because first off, we love biotech, and second, we're heavily invested in biotech, and third, wow, what a crap sandwich. So if you look at biotech, it's a little bit of green like Moderna, or Vertex at the high end. And lots of other stuff is red. And the thing that I can't really show you, it's not really coming out, is the Chinese stocks. Oh my God, Budweiser's down 5%. That's killing me over the week. So we have this weird thing going on with the market, right? People aren't staying home, they're going out, going on vacation, they're spending. Maybe they're not buying Budweiser beer though, right? They might be buying some other kind of beer though. But let's just take a look. Google did great because people are advertising still, but that may be a lagging indicator because that's last quarter, right? That's last quarter. So what are they doing now, right? So it's summertime. I just want to keep that context. And when I look at, first off, FinViz, I love it, right? So you got these lazy days, right? It's going up, it's going down, it's probably going to come back up again. Not a lot of heavy direction in the market right now. I don't have a way to show you volume, but if you look at these charts, relative volume is under 1, under 1, under 1. So we have lower volume than normal. All right, let's take a look at some of the indices. So the NASDAQ. NASDAQ Composite, top 100 stocks. You could see here the volume is down. Anytime the volume is less than the line, I'm gonna pick this up a bit. Volume rate of change over 30 days. You can see how it's really dropping as we enter into August, and that's normal, right? Because it's summer. But what's interesting is it's still up. I mean, you could say it's flattening, but yeah, it just hit a peak right there in end of July. So this is still a market in an upward trend. The Russell 2000 is flat, truly flat. Small caps, money's not flowing into Russell. If anything, it's pretty weak. There's a distribution going on with the small caps. So we talked earlier about market breadth, right? So money's going into the large caps. The large caps look larger, and the money is not going into small caps. So where are we? We're sweating into small cap biotechs. Satsuma, AKBA, Corbis, truly sweating. We're down like 25-30% in those two positions. We're up maybe a couple of pennies in Satsuma. Completely sweating. And what I mean by that is there's so much volatility. There's not a lot of action in the market, not a lot of conviction. And so just to show you, right, something like a Satsuma. So I like to watch the book. Level 3 book. I'm sorry, level 2 book. Book Viewer by NASDAQ. This costs $15 a month. I highly recommend that you subscribe to it. And what you see here is you see, 220 shares are posted to be purchased, or 220 shares at the current price, 100 shares being sold. So if they were actually to hit the ask for 100 shares for $500, and the price is up to $539. Now, this is not a liquid market. This is like a crazy market. Now, where are the market makers? So here's ETM. So ETM starts off at $549, which is nice, by the way, because I tweeted on this that they were almost 50 cents up and 50 cents down at the market maker level, which is not making a market. It's allowing a market to drift aimlessly. But here, you got like 15 cents on the upside. 12 cents on the upside. And you got here 524, 13 cents on the downside. That's a tight market. That's a quarter. Okay? Love that. Love to see the market makers stepping back in. I'm actually going to show you how to identify those market makers because I think it's important. So we're at 537. Stock's going to move. The stock could move 50 cents, 25 cents just by looking at it. You don't even have to buy or sell any shares. It's a different market. It's a different market today. And so let's take a look at some of the others that I follow. I follow AKBA. Now, AKBA looks a little different. AKBA trades a couple million shares a day. This is a different kind of stock altogether. And if I take a look at the top 120 orders, and I take a look, let's say, by price, and I see 9,000 shares, 16 orders. At the bid, at the ask, I see 6 orders, 2,200. So this thing's probably going to blow through 251 and a 252. But all day long, this thing's up and down, a couple pennies here and there. There's no real action. I go down to the bottom, though. Total shares for sale is about 300,000 shares. Total shares, to buy is about 300,000. Total shares to sell is about 1.7 million. But there's not a lot going on here. Not until you hit like $3, right? So the shares, it's still a very thin market in the summer. Now, the truth about AKBA, let me just lay it out for you. And by the way, I'm gonna post the picture of AKBA. So we're long AKBA. We like AKBA. It's got, from a fundamentals perspective, it's a good stock, right? It's pretty cheap. It's good possibilities. It's a bet, though. It's like a coin toss, right? And so nobody likes to bet on a coin toss, right? Heads, tails. Does the FDA approve the new drug? Because if the FDA approves a new drug, it's worth, conservatively, U.S. sales alone, after they pay off the $45 million, $7.50 a share. So we're talking next March, I got a call on $7.50 a share. But it's a coin toss. Are they going to make it or not? I mean, I would say, of course, they're going to make it, right? I'm long the stock. But a lot of people are like, they're not going to make it. And so what happened was, I'm not going to flip this coin. Because I don't want to know. But I'll tell you this. The market used to see this as a very nice stock. $10 stock. And then it dropped to $2.65 because they had data that didn't meet the FDA endpoints. It's not enough to meet the FDA endpoints. There's another stock that's in a similar space but with phosphorus levels in the blood serum. And they hit all the endpoints and they still got denied by the FDA. Denied, it's not clinically significant. Show me that patients are getting better. So, a tricky business. The chronic kidney disease business is tricky. Fibrogen didn't get approved. That's this recent crash is because Fibrogen. I was on the call. It was like 5 hours long, and I'm listening to the FDA hammer them about what's going on with the data. There's issues. There's safety issues. But I wasn't expecting it when I got off the phone that I should have, or I got off the video, that I should have sold it at 420. By the way, I should have sold it at 420 because now stock's at 250. And I've watched it go down and I've just bled the whole time. And the problem is I believe the stock is like a $5 stock, right? Because it should trade at about 250. Got tons of cash. It's got one drug that's selling already, and they just got a $40 million order for it. They're buying up drugs and companies, and they could buy up other companies, by the way, to booster their kidney business. They're doing tons of research. They're hiring a lot of people, a lot of salespeople, which is usually a good sign. They're counting on the FDA to approve vadadustat. And so, but it's a 250 stock unless the drug gets approved. Drug gets approved, it's $10 stock. I love the idea of a $10 stock for $250. I'm going to make 3 times my money. But if the drug doesn't get approved, I didn't make any money and I held for a year. So it's a tough business. So now, take that context and let's go back to how it's trading. There's a lot of back and forth. So people made money starting to short it at 420 and buying it back at 250. But even this week, I've seen just a massive pressure, downward pressure on the stock. And it's easy to do a downward pressure in the summer. There's nobody there. There's nobody there. I mean, for the next 2 weeks, I'm not going to be in front of my screens. We're walking away here. It's summertime, right? And so let the market do what it's going to do. You can see AKBA. I mean, it may go up, it may go down, but it almost doesn't matter this week, next week, for 5 weeks, because it's summertime. Same thing with Corbis. So I'm long Corbis, right? I love Corbis. Corbis is another one of these. It's not quite as advanced as AKBA. At least AKBA has got some drugs that are in the FDA pipeline. Corbis is like all futures bets. All bet, all future. Build a pipeline. We're going to cure cancer. We're going to cure fibrosis. We're going to cure anything that's like an immune response or any kind of inflammation. And you look on LinkedIn, they look like they have just beautiful, young, nice people working there. Smart. The CEO is a PhD in medicine. I mean, they really, really at it, right? But they also had a bad drug. 9.25, dropped to 2.25. Tough day. Stock's been down, stock's been up. Stock's been down, stock's been up. Stock's ridden down since June 9. We rode this thing down from about middle of June to now. Lost like a third of our money. It's disgusting. It's painful. watch it, right? And you see the volume's about the same. Not really moving. You had a couple good days there where people loaded up. My guess is that the memers are loading up this stock. It's been held too declining, too flat. People are getting out. My guess is, right, I don't want to catch the falling knife, but it's going to pop. Look at that volume. When it moves, it moves. 70 million, 50 million, 13 million, 67 million. They're going to pop this stock like crazy. So if I were you, I'd be getting into calls. I'd be getting into Corbis, loving it. So here's the problem with Corbis, though. I want to talk to you about this. Because, we're studying for the Series 7. We're studying for the Series 65. So I'm having to learn about margin, short, and options. And to be honest, I don't sell short. I don't. I'm sorry. There are people who say that I should sell short. I don't. You know what I do? I go long, or I go, or I buy puts or calls, but I don't short. I don't trade on margin, by the way. I don't think it's right, for me at least. So Corbis, it's dog shit. I mean, I'm sorry to say that word, but this is a dog shit stock. This is terrible stock. This is a stock that has no good performance. I curse the day that I discovered it. I curse the day that I bought it. But you know what? I'm still long. Let me explain why. Let's take a look at the options. Let's take a look at January options. I give us 6 months to see where it's going to go. Right? Stock's at $1.36. You want to trade the stock at $2? It's going to cost you 28 cents. Last trade's at 25. So I'm going to pay 25 cents on $1.36 just for the chance that it might go to 2.25. Right? You want to do $1.50? You're at 32 cents. You're at this is a high percentage on the stock. You want to go higher? $2.53, right? Not bad. Still going to cost you 12 cents. The options are expensive on this stock. And they've been consistently more expensive than I've wanted to trade over and over again. So it'd be different if Corbis, the options were a couple of pennies. You got to go to $4 a share from $1.36 to get there. You want to go shorter term, you want to go September, right? $1.50, you're still at 14 cents. You got to go to $1.67 by September. That's a tough act, right? And so, and not seeing a lot of open interest in the options. You know where I see it? 2 cents, $2, August. Not going to happen. But you go from 2 cents for August at $2, 2 cents September. But now let's go January, 25 cents. So they're looking at summer's not good for Corbis, but it's going to be very expensive to make that leverage bet. And so what I would say is I still like Corbis. Not really sure when it's going to play, but I got my eyes on it. I'm holding on to my stock. It's not going to kill me. But you know what? You're sweating. You're sweating in the service of the stock. It's awful. So now let's take a look at the Russell we looked at. Let's take a look at the S&P. And what's interesting about the S&P is you're going to see it's holding its own. Look at that. This is for a year. Thing keeps going up. Let's go 6 months. Let's go 3 months. Let's go 1 month. Sure, pretty big drawdown. From 43.74 to 42.58 to 44.20. You get a little drawdown here from 44.19 to 43.99, but not much. You can't really say the S&P has any weakness. And when it's going down, I mean, it's about the same. It's about the same volume. So just not see. In fact, the volume's dropping. Look at that. We're below on the 7-day. Let's look at 60-day volume. Let's really go crazy here. If I look at 60-day volume on the S&P, we're way down. when it was up at even, when it was recovering. So, low volume market, low volume time. I'm not seeing conviction. It doesn't mean the market can't move. Doesn't mean if you're on margin, you're not going to get yourself in trouble. It just means not a lot of commit. Let's look at the bonds. You know me, I love the bond market. Triple rated, CCC, close and percent change. It's up. Bonds are trading up. Yields are lower. Yields are lower. I'm not seeing stress in the market. Okay, fine. Your high-end bonds are trading lower because interest rates maybe are popping up a little bit, but people are moving into the higher risk debt. They're getting out of the mortgage-backed. Maybe it's because mortgage-backed securities right now are being bought by the Fed, exchanged for reserves every day, every week, and there's talk of a taper. Maybe the Fed's going to stop buying because of inflation. They're probably going to go after the mortgage-backed securities first. In fact, I remember when I was listening to Chairman Powell recently speak to the U.S. House Subcommittee, Financial Services Subcommittee, many of the congresswomen, and congressmen's questions were around the purchase of mortgage-backed securities. Aren't you driving the market? Aren't you making it more expensive for homeowners? Aren't you somehow increasing the bubble in housing prices? So I can imagine, even though it's not true, they said it wasn't true, they might back off the mortgage backs. It's fine. So people are making that bet. There's not a lot of conviction even on the bond market right now. Let's take a look at some of the news. So there's some other stuff I want to talk about. Let me dig right in. I got into a little bit of kerfuffle on the internet about velocity of money. Now, who knew that anyone cares about the velocity of money? I thought it was like me and 4 University of Chicago people. But honestly, they do care. Look at that, 1.20. So the velocity of money continues to drop. In other words, there's no lending. There's no lending. Why isn't there lending? You could argue that the banks don't want to lend, but the banks are in the business of lending. That's what they do. They borrow in loans. They take in the money in the savings accounts, and they lend it out. If they're not in the savings and loan business, what are they in? I don't know. But you see it here. Money's being parked. Lots of reasons why, lots of conversation, but let me just say this. As long as the velocity of money is slow, inflation will be low. Because this is the leverage point. This is the linchpin. This is the fulcrum of inflation right here. There's no velocity of money. There's no real economy growth. I don't know where the money's all going. It's like resting. Money's resting. Okay? I don't understand it because now it's been resting for a while here. Let's take a look at the money stock. Money stock keeps climbing. Oh, look at that. Since June. May to June. Oh, flat. Wait a minute now. I haven't seen this. Oh, this is big news, people. This is a tweet waiting to happen. Okay? The M2 money supply was basically flat from May to June. So what does this mean? This means the Federal Reserve Bank did in fact look at inflation, did look at that rise in energy prices, rise in all items, 12-month percentage gain of 4.5% on inflation, 0.9% CPI raise. These are headline-making inflation numbers. And so what did they do? They didn't tell anyone. I listened to Chairman Powell. He didn't say a word about slowing down the growth of money. Because I'm tight. But he did it. He did it right here. I can't believe it. So you know what? All those Twitter people that are out there with Chicago Quantum, shame on you. Get to know your data. they didn't grow the money supply. I mean, they didn't shrink it, but this stops inflation right there. Boom. This is the chart of the day. Love this chart. All right, I'm saving it. I'm going to post it on Twitter later. You heard it here first. Okay, so very interesting. So what else did I see? So that was really interesting. All right, how do I find a market maker, Jeffrey? Who are your market makers? Who are your market makers? Okay, so let's take a look at Satsuma. I don't know if I can zoom in or not, but let's try. Let's make it big. Oh, really big. I love it. So let's look at a buy side. I got a market being made by ETMM. 100 shares. By the way, that's one of the ways to know it's a market maker. Market makers by law, or by SEC FINRA law, have to make at least a 100 share trade at a market price. They have to make the market. So ETMM, and you go over to NASDAQtrader.com, and I posted this on Twitter. So if you follow me on Twitter, you can find it. And let's see, who is ETMM? Uh-oh. Who's ETMM? By the way, type has to be market participant. There it is. G1 Execution Services, LLC. So first off, thank you for making a market in Satsuma. I own Satsuma, and I really appreciate your hard work. So who's the other one? XGWD. So you take a look. You plug it in here to who it is. No, not photo by kind. I'm so sorry. XGWD. Market participant. Go. Latour Trading. So Latour Trading LLC, thank you for making a market. You're not quite as good. You're at 502 to 554. So that's 52-cent spread. I'd love to see you do a little better there, tighten things up a little, but I guess not. But this is interesting because you're at 529, 533. So you're at a 4-cent spread. Not bad. I've seen this thing traded almost a 10-cent spread. So this is how you know. And so you can start to follow, and you can also see where else Latour Trading is working. But let's take a look at my other stock, right? AKBA. I would expect you're not going to see the market makers anywhere close on this one. So let's take a look at it by MPID. You got to get down to 243. And 257. 13-cent spread. Not bad. And if I remember, GSCO is Goldman Sachs. But let's take a look. There it is, Goldman Sachs. So Goldman Sachs is a market maker for AKBA. By the way, you go on a StockTwits, which is funny. It's not real stuff, but it's funny stuff, right? So I go on this thing all the time. Let's take a look. Did the stupidest posts like of all time. It's great. You got memes. This is from you killed Kenny. About Tree Fitty. That's what they want the stock at. So, oh my God, there's such crap here. MMs can kiss my. Excuse me. It's a picture of a guy's butt. So there's a lot of disrespect into the market makers on this site. And they're saying that, right, the market's been pumped. Look at this. AKBA is going to go green. Do you really believe it? I don't know. There's no data. There's nothing. This is just like, oh, look, head and shoulders. Oh, who knows? Let's find some more market maker stuff. I'm not. These are stupid posts. So my point about AKBA is if you follow these stocks because you're in it all day and you look, you can see posts about market makers. And you start to understand that there's a blaming going on by people that aren't making money. And they're not blaming themselves for buying the right stock at the wrong time. They blame the market maker. Now, if they wanted to be a little factual about it, they would go to their book. They'd find the MP or market participant ID. They'd see Goldman Sachs. And they'd say, Goldman Sachs, what are you doing? You've got a 14-cent spread as a market maker. You're not doing your job. But honestly, I don't think they're going to say that. They might say, hey, Goldman, we believe you're naked shorting because as a designated market maker, you're allowed to do that. But there's no evidence they're doing that. So what else are they going to say? Mommy didn't love me enough, so I didn't make any money on this stock. My mother would have loved me more. I would have been more secure, more confident. I would have held the stock. During the rough times, I would have made money. No. You know what they're saying? They should say the truth, which is don't bet more than you can afford to lose. Don't bet lunch money. Don't bet the groceries. Don't bet your rent payment. If you're going to invest in AKBA, know what you're buying. You know what you're buying? I already posted a spreadsheet on it. You're basically posting a whole bunch of cash and orexia and just great research and early stage pipelines and a chance that vadadustat gets approved and dominates multi-billion-dollar market in the United States and Europe. And all bets are off. That's a $10 stock. That's a $10 stock like that if the FDA approves it. So this is not investment advice. Do your own due diligence. Do your own research. But I'm long in AKBA. I love AKBA, right? Because I think that bet's worth making. And from a market maker perspective, thank you, Goldman Sachs, for making a 14-cent market here. Appreciate it. And when you talk about market makers, this is what you should be thinking about. What kind of a market are they making? Are they really doing their job? Are they earning that spread, right? And don't really listen to all this stuff. Now, I love stock twits because it is so amusing all day and all night to watch these things. But like here, let's go to Satsuma. You know I love Satsuma, right? It's a big position. Oh, it's up 15 cents. That's terrific. That's my largest holding, right? So the last post was my post saying, hey, I'm making a video. What do you want to hear? Slap that ask. Oh my God, I can't believe I'm showing you this. It's terrific. Then I have another post about this is about their press release. It's a great press release that they had, right? It's milestones. Then you got I'm bullish, right? Then you got hey to the moon. But there's no content. There's no data. I try to put content in and the market drops. By the way, when I posted this, let's see if they show. Oh, get out of here. It was $5.99 when I posted it. The stock's now $5.40. Come on, it's down 10% because I said that I think the trial has a much improved chance of success. And this is the facts, right? Non PhD level facts about it. So I don't know. Maybe I should stop posting. I'm dangerous to the stock. So what else we're going to talk about? We're going to talk about biotech. We're going to talk about biotechnology and why I ever thought that I wanted to be in biotech. So the reason is that biotech is a weak performer. You saw it on FinViz. Biotech is one of the markets that the Chicago Quantum Net Score thinks is ripe for investment. It thinks that this is going to go up. Biotech, ring the bell. But so what's really happened since it was called? So I'm going to do this. I'm going to be a dramatic theme here. So if I look at biotech and I look at it for a day, and you see, oh, tried to go up, but it failed. Let's take a look for 2 days. Oh, it tried to go up, but it failed. How about 3 days? You're going to see a theme here. Biotech is like in the toilet. Look at that. I mean, it crashed. It went up. This is the ETF, the S&P ETF for biotechnology companies. So this is like all the biotechs or a representative sample. Okay, highly liquid ETF. It's great. It's a great way if you wanted exposure to biotech without having to pick a winner, right? Who are you to pick Satsuma, Corbis, AKBA, or any number of stocks? It's just not. It's not so easy, right? So Orexia. No, that's not what I'm thinking of. There's others. So let's keep going here. Let's look at a month. This thing's been dropping for a month. So the Chicago Quantum Net Score called biotech stocks, individual biotech stocks, as being a possibility for efficient returns. Low risk, low return. The problem is you could be low risk, low return, or low risk, high return, and still not go up. And so, I don't know what happened. Biotech dropped, it went up, it was promising, and now it's back down. So, you're riding a wave here that's a very dangerous wave. You're losing your shirt, right? If you started buying biotech at the 135 level, and now it's 123, you lost money. Now, it doesn't say that biotech can't ever recover. Look at that. This is now going back to a year ago, 1 year. Biotech had a great run. 170. And now it's coming back down. So I'm not going to bet against biotech because I think there are plenty of diseases we got to cure and plenty of pandemics we got to prevent. And this is where it happens. This is the high risk, high return play in the market. But I will say this, when volume in the market is down, and passion is down, and commitment is down, and liquidity is down, then thinly traded biotechs are not where you want to be. You got to get out of the thinly traded crap, right? Especially now you're competing with IPO dollars. 25 new IPOs a week. That's crazy talk. A lot of competition, right? Maybe these come back September, October. I'm not sure. But right now, we're struggling with liquidity. And so we're struggling to make a market, and we're struggling with stocks. And so you kind of have to wait. Wait. I just wanted to show that to you. I was thinking about it. What else do I want to talk about? Well, one funny thing, right? Turkish stock market went up. Something must have happened in Turkey. No idea. We did a bunch of runs for Turkey. Nothing ever came of it. So I want to talk a little bit about the debt market. And so, one of the things we look at when we look at debt is we look at U.S. government. But let's take a look at corporate debt. So all issues traded today: investment grade, high yield, convertibles. So convertibles are great because you get that equity exposure. So usually a convertible has like a break-even point with the stock price, right? And then bonds and the stocks will trade fairly consistently. The company likes to do a convertible because they maybe save some money on the yield. Okay. So when the market looks strong, I would expect convertibles to go up. Convertibles are up 9 to 11. So a little less than 1 to 1. On your investment grades, though, you're down almost 2 to 1. High yield, it's like 1.4, it looks like, to 1. And so money's moving into high yield. I get that, right? Because you can earn 6, 7, 8 points on your money. Some of the yield to maturities could be 10, 15 points on high yield. You like that. You're going to make some good money. But on the investment grade, not so much. So we must be seeing an increase in interest rates. We must be. So let's take a look at the government money. So government bonds. Treasury yield curve. It's below a year ago. Look at how low the short-term yields are. But then you come up, the 2 years up a little from a year ago, the 5, the 10, the 30. But we're still at like that 1.9, 1.3. We talked about this. This is about where we were last week. So a yield at 128 for 10-year money when inflation's hitting 4.5 points, that's a negative 3% real return. Either those are going to go up or inflation's coming down. One or the other. But you can't have negative real returns of 3% on 10-year money. And you can't have negative real returns of almost 4% on 5-year money and almost 4.5% on 2-year money. You just can't. Either you're going to drive down inflation, you are going to punish inflation if you're the Fed, stamp it out if you can, down to 2%, or these yields are going to rise. And you don't have velocity of money. So velocity of money is not saving you. You still have a risk of deflation here. A significant risk of deflation of money not moving. There's almost $1 trillion of reverse repo money every night right now. That means the largest banks, they're not lending. They're holding their money as reserves, and they're handing them to the Fed. Every night, $1 trillion. Why not hire 20,000 bankers and make some loans? Right? They're not doing it. So I want to talk about some of the yields. Let me see if I can find those. Selected interest rates. Make full screen and make big. Federal funds rate, 0.1. Commercial paper is trading at 5 basis points, 6 basis points for 3 months, 9 basis points for 3 months if you're a financial company. The bank prime loan rate is 3.25. Money's cheap right now. Treasury bills, a year, 7 basis points. You never see this. Let's look at inflation indexed. -2%. You're paying the government money to protect yourself against inflation. I remember when I was buying tips, I was earning 2-3%. Love it. Protect myself against inflation and earn a nice yield. Those bonds, if they're still paying, if I still have them, probably earning me 5-6%. Love it. Because right now, Fed funds rate is 10 basis points. Commercial paper is 6 to 9 basis points for 3-month paper. If you're at the discount window, you're paying 1/4 point. If you're a little bit distressed. So, what do I got to say here? I guess the yields are down, but people are worried. So, bonds are trading slightly lower, so there's an expectation that yields are going to rise. We got our market makers, so we know who's making market in our stock. It's summertime, volumes are low. Let's see what else I pulled up to show you guys. Sorry, this is taking a minute. I want to make sure. Yeah, I already showed you the S&P. S&P still rising. NASDAQ still rising. Although right now it looks like the markets took a little turn for the worse there. Markets are all down. It's a tough Friday. Now, it's always hard to hold over a weekend if you're not sure. Here's the other thing. So let's look at the euro to dollar. I use the euro as a proxy. We could look at the Great British Pound. We could look at the whole basket of currencies. But let's take a look. And so dollar strengthens when this goes down. Dollar weakens when it goes up. So the dollar had weakened into May. The dollar strengthened up until last week. This week, dollar's weakening. Yields are down to 1.28 for the 10-year Treasury, and dollar's weakening. So what does that tell you? It tells you that things are starting to stabilize, right? It's just so interesting. And maybe it's just a summer thing. Could just be a summer thing. Oh my gosh. So while we were talking, look at the 10-year yield. Thing went down to 1.22, 1.23. It's low yields. In fact, I would expect with lower yields, bonds should be up. Low yields go down, bonds go up. So I'm not seeing it in the FINRA data. Maybe I got to hit the refresh button. But look at this. Yields went up to 1.5. Everyone was worried. Oh my God, taper tantrum. Oh my God, taper tantrum. Look at that. There was a whole period there from early March to early June. 3 months of pain and panic. But since then, market's been correcting. Yields have been dropping. Yields are dropping. You have to go back to February to now to get a flat regression line. So it's so interesting. Inflation's going up, but yields are dropping. There's a complex set of positions here going on. that all counteract each other, and I'm not sure where we're headed. Oh yeah, dollar to Great British Pound. Let's take a look over the... Oh, wow. Dollar really strengthened. July 20 went all the way back. Weakened all the way back up. So it's a short-term thing. It's not material. Forget the yen. So Bitcoin's another one that's always interesting. First off, Mara is our stock that we look at to counteract or to play on Bitcoin. And so somehow, July 20, Bitcoin was down. It was under 30,000. It closed at 29.8. And now it's at 39. It was as high as 40. So what drove Bitcoin up 1/3 in a week? I have no idea. Week and a half? I have no idea. It's like a lottery number, right? I don't know. But something happened. On the 25th, a conviction play, and it went up. My guess is if I put Mara against it and Riot. By the way, our model loves Mara. We'll make that in blue. And loves Riot. Loves those stocks. Let's take a look. So they drop when Bitcoin drops. They rise when the Bitcoin rises. In this case, maybe not as much, but still pretty nice rise. So up, down, up. It's a quick and easy way to bet on Bitcoin without the compliance issues. So Mara and Riot, I strongly recommend if you want exposure to Bitcoin, that's how you do it. Okay, let's see. What else are we talking about? What's interesting is we could just look at today. The full market. Where are we at today? We see household personal products are pretty weak. Tobacco's weak. Beverages are weak. So your defensives are weak. Your internet retail's weak. Your financials are weak. So this is everyday economy here. This is people. Energy is weak. Across the board is red. Basic materials is red. Basic materials, building, copper. Again, beverages, tobacco, household defensives. So things that really play into people and consumers. Even though consumer spending is growing like crazy, we're showing a call in the future on a weakness of the consumer. Plus, weakness in your industrials. I have a bias towards industrials. I love industrials. I love that part of our economy. I mean, Boeing just had earnings for the first time since the debacle on the aircraft with the recall. Even Boeing's down 2.25. Airlines are down. So people are betting this has got to be a COVID put right here. So there's a COVID put today on Friday. So my guess is if I were to look for COVID update, yeah, COVID-19 update, Illinois. Where are we at in Illinois? Let's take a look. So if I look at the data, new cases, Illinois, for 30 days, they're rising. 4,000 on Monday, 2,600 on Monday, 1,400 on Monday, 1,100 on Monday. That's a good comparable date. Not to be morose, but let's look at the deaths. So for 4 weeks, cases have gone up, deaths flat. So what's happening here is even Mondays, 14, down from 21, down from 26, down from 31. So my number of cases is going up, but my fatalities is going down. Not sure what that means, but if the cases are going to start rising, probably the fatalities will also start rising, and this is what people are worried about. The numbers are still low, but they're worried. By the way, just to show you what I saw at the gym yesterday, Lollapalooza 2021, Chicago. Where's the photo gallery? Yeah. Oh, come on now. Just let me look at the picture. Photos of Lollapalooza. Oh, there's not so many people. Oh, I see lots of masks. Not. I don't see lots of masks. You know what I see? I see people having a good time. I see garbage. I see lots of people. Guys, I see a lot of people. I see people close together. I see Lollapalooza. I see spread the COVID. It's crazy. It's crazy. They're not 6 feet apart, and they're not wearing masks. First off, it's not to say I begrudge people having a good time. If I was 20 and vaxxed, I'd totally be at Lollapalooza. I wouldn't be working, right? I'd be home from summer, from college, and I'd be partying my tail off. But so it's things like this where you have people, as far as the eye can see, wall-to-wall people, jam-packed, that makes people worried about COVID-19. I can understand it. I really can. Now, they say Lollapalooza, you have to show your vaccination card to get in, but honestly, I'm less than convinced that they're going to be that aggressive when the number one advertisement is the closest marijuana shop to Lollapalooza. People are having a good time. They're not worried. Tons of people. Oh, bring the baby. Get some COVID. It's nice. You know, the baby isn't vaccinated. It can't be. Lots of people. Lots of fun, right? I wish I was there. Lots of fun. But I'm telling you, Lollapalooza. Ugh, really? Just don't do drugs, people. Do not do drugs. Even these two guys, right? Faces right next to each other, right? Super spreader event. And, wow. Oh, one person with a mask. Yeah, we'll leave you with that thought. There's one guy not going to get COVID. So, now let's take a look at Koyfin. I haven't talked about Koyfin in a while because they limited my access for a little bit because I'm not a subscriber. So, let's take a look at the top news. Oh, CDC report. Internal report calls Delta variant as contagious as chickenpox. Oh, that's great. CDC warns lawmakers that Delta variant is as contagious as chickenpox and may make people sicker than the original COVID. All right. So the CDC is basically spreading news that we're in trouble. Oh, here's a nice one. CDC data shows that 74% of people who tested positive for the virus in Massachusetts outbreak were fully vaccinated. Oh, why don't you just scare the bejesus out of everyone? You know, I'm just not there. It's summer. We're going to take it easy. We're going to enjoy ourselves. We're going to go to Lollapalooza. We're going to go on vacation. And we're going to let the market go where the market goes. And what I'm telling you is, that's what we're seeing today. And just to go back on what that might look like for you, that looks like a market that is thinly traded, that is low liquidity, and just going to show you a GIF. It's one of my favorite GIFs. This is the Austin Powers movie where they got a steamroller and they're going after the security guard at VirtueCon, which was the bad guys, right? And he's yelling because the steamroller's coming. And he's yelling again about 10 seconds later. And then 10 seconds later, 10 seconds later, 10 seconds later, because it's a steamroller and it doesn't go very fast. So just like me holding AKBA and Corbis, trying to hold on to a falling knife, you got limited liquidity, you got raising IPOs, you got markets at the top, you got economic uncertainty. On the other hand, you got some good news. You got lower interest rates. You got the Fed fighting inflation, doing what the Fed is supposed to be doing. I'm a huge fan of the Fed right now, by the way. But you're going to have, look, they're yelling, get out of the way, get out of the way, right? They're yelling, get out of the way. Guy doesn't get out of the way. Right? So I guess what I'll say to you is this. Just be thoughtful in the market. So I will leave you with a thought. Last week, we sold a third of our passive index funds. We made 70, 80, 90%. We're going to get killed in taxes. Oh my God, are we? But we dumped a third, and we did that because we wanted to reduce the exposure in the market. We're still exposed to our 3 biotech stocks, but we're significantly going to be deleveraging. If the market continues to look a little nervous, we'll probably deleverage again. And so don't be the deer in the headlights, right? Don't be this guy. If you know the market's moving, do what you got to do right now to protect yourself. And I wish you to have a good week in the markets, make some money, right? Go on vacation, do what you got to do. You're probably not going to see me on Twitter or Facebook or whatever, making videos for a while. I do want to show you, though, that we did update our website. We simplified it quite a bit. We're a consultancy in Highland Park. Here's our research. Here's our portfolio analysis. Here's how you buy an analysis. Here's how you buy a project. You could buy some hours. We totally updated our market Q&A. We've added even more information. We got our negative beta stocks. I don't know if you know, but Chicago Quantum is the home of the negative beta stock list. And we update it pretty frequently. This is updated from July 27 market close. And these are your negative beta stocks. And we've got more. We post the highest yielding stocks, greater than 10% yield over the past year. Do your own due diligence, do your own research. But if you like to earn a nice, healthy dividend, these are the stocks you should be looking at, because these are the stocks that already paid a dividend. We also post stock splits. Lots of people like to invest in companies that split their stock. They feel like a stock like a Tesla, Apple, NVIDIA. These are stocks that are already good performers, are probably going to keep performing well. And so we keep this data up to date. It's a result of our production runs. And you don't have to pay to see this data. In fact, for the quant heads out there, we even post our validated tickers. So this is July 23rd. This is 3,600 tickers in a Python readable list format. You can just grab it, copy, paste it into Python, and there you go. You got your 3,600 stocks clean. Consistent data. Data every day. No negative beta. Trading range from 25 cents, I think, or 30 cents to $1 million a share. We're removing your zero volume stocks, your anything under 100 shares, 101 shares. So we're doing all the heavy lifting for you because we do it every week. We post it for you. And so if you're a quant head and you want to take a look, go for it. And what I'll ask, if you like the video, do me a huge favor. Let's see if I can find it. I'm going to ask you a big favor. By now, if you weren't committed to this video, you've already hung up. So if you like the video, please like it. Please comment. Please subscribe. And please share the link. One of the ways that we know that you like the video is that you do that. If you don't like it or give some indication that you even saw it, right? We don't know. And so it really helps me to know that you liked it, that you enjoyed it, that you wanted other people to see it. And that would be really appreciated if you did that. So please have a great week, good week in the market, and we will talk to you later. Bye-bye now.